Hello friends, welcome to Project Finance 101 series, Introduction to Project Finance. This series will focus on what is a project, what are the different types of projects, what are the distinguishing features of a project, what is capital budgeting exercise, what are the key tools used for capital budgeting, how project market analysis etc. is done, and the career options in project finance. I'll be dividing these topics into series like Project Finance 101, 201, 301 and so on. So let's understand what exactly is a project. A project is an undertaking carried out either individually or in collaboration with others and possibly involving steps like research, design, production, implementation and so on, all these carefully planned to achieve a particular goal or objective. Undertakings that are in the nature of a project are time bound, that is, they have a defined end. They produce something which is unique or something which is not in the ordinary day-to-day course of a business. So the output or deliverable is unique. They are executed upon some agreed constraints. For example, what is the scope of the project? What is the timeline of the project? How much budget or resources will be allocated and so on. So, in order to understand this, let's go one by one into the key elements of a project undertaking. So, projects are undertaken either individually or collaboratively. For example, you might undertake a project to start your own YouTube channel. It involves multiple phases like research, planning, design, and so on. So you might research which area you want to start your YouTube channel in. You will look at what is the competition. You will design how you are going to arrange your topics or what subjects or areas you are going to focus upon. The project undertaking is undertaken with the goal of achieving a particular aim or an objective. For example, your aim for starting a YouTube channel could be to establish your brand equity. They are time bound, so they have an end, there are phases and outputs, deliverables are linked to that phases and the time. For example, you might say within 1 year I want to get 10,000 subscribers for my channel and let's say 10,000 hours of view time. The projects aim to produce something which is unique. So output or deliverable is unique. It's not something that you do in the ordinary course of day-to-day operations. For example, if you are producing tea, then producing tea is your regular day-to-day activity. But if you want to set up a particular outlet for producing tea, then that will become in the nature of a project. The projects are undertaken or executed under agreed upon constraints. So constraints could be in terms of scope. So you will say, my channel is going to focus on XYZ areas. This is a timeline, I'm going to look at overall 2 years timeline to achieve my goal, and every 6 months, these are the deliverables that I expect. And you will allocate some budget or resources. Your resources could be, for example, yourself, you might have a content writer and so on and so forth. And the budget could be, let's say, 1 lakh rupees a year. I'll give you some examples of projects to understand it in more detail. Airport construction, typically nowadays undertaken in public-private partnership by Airport Authority of India, is an example of a project. A road construction, most of which again nowadays are undertaken, at least when it comes to building highways in the public-private construction mode, are example of a project. A dam construction, again an example of a project. If a company which is into manufacturing cars, let's say Tata Motors or Suzuki Motors or Hyundai Motors, if they want to introduce a new model of a car, that is an example of undertaking a project because it involves a lot of phases, a huge amount of investment upfront, in the entire design, prototyping, etc. Hospitality company building a new 4-star hotel or maybe getting it built by a construction company and then getting it on lease is an example of a project. Another example of a project could be, for example, setting up an IT system. So an organization wants to set up a payroll system for managing the payroll of its employees, or it wants to set up a customer relationship management system to manage the customer relationships better. a charitable trust wants to set up a hospital or wants to build a educational institution, maybe primary, secondary, or maybe wants to set up a college. That is an example of a project. Let's understand now what are the different types of a project. I'll go into each of these topics in detail subsequently. So projects can be classified by the sources of funding. For example, is it a public project? For example, the municipalities are undertaking it, state government, central government. So these are typically public projects. Or is it a project undertaken by a private company? For example, Hindustan Unilever is setting up a plant, or maybe Nestle is setting up a plant. So that is an example of a private project. Or maybe it's a project in public and private partnership, or what is called PPP. Right. So, and again, I'll go back to same examples. As airport construction, road constructions, or etc. being done in a public-private partnership mode in a big way, because government lacks the resources and technology, but government is only able to acquire the land, and government has the right to charge the toll, which of course is done through the company or a special purpose vehicle. The projects can be classified by the strategic goals or objectives they want to achieve. For example, you might want to introduce some balancing equipment in your production facility in order to remove some constraints and increase your production capacity. You might want to modernize your equipment. So you want to replace your existing machinery with a new one, which is available in the international market and which is going to produce the same product but of a better quality with a higher productivity and so on and so forth. You might undertake a replacement project. For example, nowadays, rebuilding of a lot of houses goes on, in cities like Pune. So there is a builder who gives a redevelopment proposal. They build the houses. They give, let's say, construct 10 houses, give it to the existing house owners, and there are 4 more which they sell it to the general public, and they make money on that. That's an example of a replacement or a rebuilding project. Project could be in the nature of an expansion. So there is let's say a hospitality company. They have got 4 hotels in a city. They want to go for the 5th one. So within the city, they are undertaking an expansion. Or maybe there is a building that particular commercial building, and they want to add some floors to that. They got permission for that. That's in the nature of an expansion project. The projects could be in the nature of diversification. For example, there is a company which is into, let's say, bread manufacturing. They want to get into biscuits manufacturing. It's an example of a diversification. And this is called a related diversification. They are in the same food business, but they are not exactly now into bread manufacturing. They are getting into a related product. Diversification could also be unrelated. For example, the bread manufacturing company get into something like opening restaurants, which is not exactly related, though both are in the business of food. It could be a rehabilitation project. For example, let's say government is constructing a dam, and then there's a catchment area of the dam, and on all the sides, some area land acquisition has to happen. There are people who are settled there since maybe last couple of decades. Now those people have to be rehabilitated somewhere else. Their livelihood, then their stay, etc. has to be taken care of. That's in the nature of a rehabilitation project. The projects can also be classified by activities. For example, we can say, this is a construction project. They are building dam, airport, road. They are building a mall. Like this is an example of a construction project. It could be in the nature of setting up a production facility. Like somebody setting up a production facility to manufacture computers, or maybe to manufacture cameras, or maybe to manufacture something like, let's say, shaving cream. That's an example of a production facility project. It could be in the nature of, let's say, IT services. For example, IT services company like Infosys or Wipro, getting into one more city, or in the same city they are setting up another facility. So these are classifications of projects by activity. You can also classify projects by the objectives they seek to achieve. For example, it is in the nature of a research project. So defense research facility being set up by, let's say, the Defense Department of Government of India. That's an example of a research project. It could be a product development project. So for example, the product is being developed by, let's say, a multinational company which is in, let's say, in the cosmetics, right? So they want to develop a new product in cosmetics. That's an example of a product development. It could be a social project. For example, I gave you earlier mentioned that trust could be setting up an hospital, an education institution, or somebody might be setting up a home for the elderly people. So these are examples of a social project. So different projects by their objectives. Projects can also be classified using size as the criteria. These are small projects, medium-sized projects, large projects, and so on and so forth. So you will define, for example, if the investment is so much, then it's a small project. Projects can also be classified by looking at the geographical area that they cover or serve. For example, it's a municipal project which is for water purification and sort of providing water to the people within that municipal boundary, or it could be a project undertaken by a state government to let's say provide electricity to some of the villages, or it could be a national level project, Indian government through let's say company like National Hydropower Corporation setting up a dam in Far East to basically provide the electricity across India through the electricity grid. Or it could be an international project, for example, the international city or the like gift center, for example, in India, which is supposed to be in the nature of an international sort of outlook kind of a project. Or Interpol, the international policing organization, setting up a facility. Now, by its very nature, Interpol is a international organization, so it is a international project. Also, let's understand what are the distinguishing features of a project. What distinguishes project from a normal day-to-day business activity? In case of a project, the expenditure is incurred in the present for the benefits that are expected to accrue over long term in future. For example, if you set up a new restaurant, you are not going to recover all your investments today. Maybe over next 3 years, 5 years, you are going to recover. So benefits are going to occur over long term, where the investment is made in the present. The project related decisions are not easily reversible. Once you commit to that, you cannot easily get out of a project, right? So let's say you decide to set up a airport. The government through Airport Authority of India wants to set up, let's say, an airport, and you can't just abandon that very easily half the way, because you have committed a lot of resources, you have acquired the land, so you will incur a lot of loss. So you can't easily reverse that decision. Also, the funds involved typically in a project are very, very large, right? The normal business activity will not involve that much of a significant outlay, and therefore the projects are financed out of long-term sources of capital. So typically by equity or long-term debt. The decisions that are undertaken when you start a project are in the nature of decisions that are tied to the strategy of the organization. So by very nature, projects are generally strategic in nature. That is the impact on long-term future of the organization, and therefore they require the buy-in from the owners, which are typically, let's say, in a private limited or a limited company, they are the equity shareholders. So as you might know, under the Companies Act, if the company wants to acquire assets, then they have to take the approval of the shareholders. Shareholders might delegate the authority up to a certain extent to the directors, but still the approval is required from the shareholders ultimately. Projects require specialized skills for implementation. So, the day-to-day operations may not require those kind of specialized skills. So, these are some of the distinguishing features that separate projects from the normal day-to-day business activities. The exercise that is undertaken when you want to, let's say, look at whether the project should be undertaken, what are the returns that are going to come out of it, is an exercise called capital budgeting. And capital budgeting is a very critical sort of tool for any organization before they take the decision to get into executing a project. We'll understand capital budgeting subsequently in detail, including the capital budgeting tools. Understanding all these will open up career opportunities for you in banks and financial institutions in the area of project finance. The roles could include, for example, an analyst role. The analysts who understand project management and financing very, very well, they are engaged to prepare the project reports. We'll understand the details of project profile or report in subsequent videos. So these reports are then prepared, then the assessment is done, to understand various parameters, risk, and then the financial analysis is also done to justify the investment in the project. Analyst job is very much in demand across various players, not just banks and financial institutions. There are relationship management jobs. For example, if you are with a bank, obviously bank wants to get new borrowers who are going to undertake projects. So they will encourage the relationship managers to develop relations with various clients and prospects in order to get good proposals that they want to finance. There are credit analyst roles where they are specifically focused on reviewing the projects or appraising the projects from the point of view of, let's say, giving something like term loans or maybe investing in bonds, which are typically issued as a long-term source of funds for financing the projects. So these credit analysts focus on evaluating the proposals that they receive. They do all assessment around market, the opportunity, the competition. They look at the financials, question those financials. They prepare their own financial model if required. They prepare the credit review note, or what is called the appraisal note. and they might recommend these projects for financing, and they will say, this is the documentation for the required to be done, these are the terms and conditions of disbursement, and how the loan should be given, what should be the interest rate, how the repayment should come through, etc. And then they also might be involved in the final review and disbursement and monitoring of the project. In the Project Finance 101 series, I'll focus on understanding what is a project, what are the key challenges faced in project financing decisions, what exactly is capital budgeting exercise, what is the life cycle of a project, what are the different types of projects, and different types of project financing sources. In the subsequent series, Project Finance 201, 301, I'll pick up specific topics and get into those in detail, such as how the project analysis or review is taken. For example, how the market opportunity assessment is done, how the technical analysis is done, how the commercial and financial analysis is done, so on and so forth. In the project selection, I'll take you through the entire life cycle of how the project ideation is done, how the market or environment analysis is done, how the projects are selected, how they are prioritized, and so on and so forth. In the project profile preparation or project report preparation, I'll cover the entire project report, what does it contain, starting with executive summary, the market opportunity assessment, the specific products, and then their projections and financials and funding and repayment schedule, etc. All those I'll go into detail. And then of course I'll also look at how the project appraisal is done from the point of view of the project financer. So what are the different techniques of appraisal, like legacy techniques like accounting rate of return, payback period, and also the modern techniques like net present value, and those which use basically the discounting as a method of appraisal. Understanding all this will help you understand project finance very, very well. You will also understand what kind of skills are required, and most of those skills you will acquire if you go through this series itself. You will also understand what are the career options and what you need to do in order to grab those career options, and you will get a great career in the world of project finance. I hope you liked this video, you found it very, very interesting. If yes, please do like this video, share with your friends, and also subscribe to my channel. Thank you very much. Take care and cheers.